Thank you very much for your attention. My name is Stephen Goldstein, and I live in Mountain View, and I am trying to correct some information that has been, I believe, misrepresented regarding current issues, especially involving the values of properties in the city of Mountain View, along with rents in the city of Mountain View. So let's go one step at a time. The City of Mountain View City Council and the Rental Housing Committee and the Mountain View Voice, among other things, have made statements that says that the rental market in Mountain View has recovered after the COVID situation. Actually, it has not, because there's actually two things that have happened in the city of Mountain View at the same time. In January 2020, it was made illegal to have IT contracting operate in the state of California the way it has been for decades. I know this for a fact because at one point in time I was a contractor for a company called PayPal, and when I learned that was that 70% of the people that were doing work on their IT infrastructure were not employed by PayPal, but in fact were contracted to PayPal by a third party. And that is, what I understand, has been a very common practice regarding at least 50% of the IT engineering, design, and management of the infrastructures that have been performed here in Silicon Valley. So now let's go to the next part. Again, it was claimed that the rental market had recovered to pre-pandemic levels in the last meeting of the Mountain View Rental Housing Committee. This video is going to demonstrate, in fact, that that was not correct. Now, Zumper is a relatively well-known and well-established website regarding providing market analysis in various cities in California. In this case, I am looking at a report that I just pulled up today on June 21st, 2022. You should be able to see this on your screen. And it's currently showing the studio prices and apartments availability in the city of Mountain View as it has been informed. And as you can see, there is some positive information here saying that the median rent for a studio unit is now $2,700, and it's up about 34% from last year, but there's only 3 apartments for rent. So that's really showing that there's actually, at least from what I'm seeing here, there's probably a significant shortage of this inventory in the city of Mountain View. And mind you, remember, the city of Mountain View has a majority of its units not being affordable units, but in fact luxury units that have been built in order to satisfy the tech market and not the general public. Now, here's where things get really interesting. Here's a graphical chart representing the history of rents in the city of Mountain View. And as you can see here, yes, we've had a spike regarding rents in the last current few months. But of course, this is long before the recent inflation strategy regarding the Fed. The Fed has now raised interest rates by a significant amount, and at this point in time, real estate properties are starting to, in fact, have to correct themselves because the cost of borrowing has gotten so high that people are now demanding lower prices. So in this situation, this may be a artifact meaning that it is something that is not necessarily going to be a valid current market. It's going to be an outlier. But if that's the case, then if you can look carefully, yes, it has actually peaked in May at $3,292, but it's actually already declined by $500 in less than a month. And that, I think, is because it was never a realistic expectation in the first place. And the bottom line is they are attempting to bring the prices to the same level as they were, say, 2019. However, this is where things are going to not necessarily come true, because as the Fed rate continues to be increased, there's going to be a significant correction of values in the market of Mountain View. As an example, my particular building that was bought in 2016, February, and here's an example of that value regarding a studio. What happened is that in the last 2 years, this particular property has lost value officially by having it reappraised by the landlord by as much as 28% of its original value has been lost in the last 2 years. And I believe this is not an outlier. This is a real trend that's going on, because things are not necessarily returning to normal. As we all know, COVID is still significantly not under control, and AB5 is still in effect. So there's no reason other than misinformation that people were actually paying so much for rent during that particular period of time. And unfortunately, that's going to throw some very scary situations up. In any case, in April of this year, the rents were $2,325 for a studio, and that was just about the same rate as it was in April 2015, which in effect means that there has been no true recovery yet. In fact, it does not look like we are in a state where recovery is expected to continue. Now, I'm going to move on to a one-bedroom apartment. Now, the one-bedroom apartments, again, remember that the units that we have in Mountain View are more luxury units than there are regular. So the median is a bit skewed. They're trying to claim that the median rent in Mountain View has risen to about $2,000 to $3,000 in this case, a 31% increase, but only indicating about 35 apartments for rent. However, as you can see regarding this chart, the original values prior to pre-pandemic were around $4,000 as of July 2019. The current value is around $3,000. That means we are now only equaling the same rate we were in March 2016, and that was a particularly stable and productive period of time. The real reality is that we have not recovered to pre-pandemic levels. And again, with the change of the Fed rate and so on, a lot of these units are probably being operated by leveraged funds. I would say that it's very likely that the property owners are unfortunately seeing that their investments have not even gotten close to recovery. Again, there's still a $1,000 difference between the 2 points for a one-bedroom unit from pre-pandemic. That is at least a 25% discount from the values that they were before. Granted, again, this top screen says there's a 31% increase, but that's a year-over-year change. And as you all know, the pandemic it has been going on for more than 2 years. So you're, in effect, taking only the current window of time into effect. Let's look at two-bedroom units. Two-bedroom units are currently renting at $3,600 as a median, which is only a 16% increase over the last year. And there's only 41 units that these people are aware of that are for rent in the city of Mountain View. However, again, if you look at the chart here, pre-pandemic, they were renting for nearly $5,000. And so if you take into account the current market, which is $3,600, you are seeing a net loss of $1,400 a month in rent regarding the current market. Again, everyone's been saying that we are returned to pre-pandemic levels. This is absolute proof that is completely wrong. In fact, what we are is we are back at the same levels as we were around 2016 again, which means, in effect, we are way behind because, as everyone knows, if you aren't increasing in value year over year, you're not actually making up for any increased supposed value, if there is any, regarding the property. As we all know, and as I've already explained, there are property owners that are probably going to the Santa Clara County and getting their property values reassessed without telling their renters that they are doing so, and thus breaching their contracts regarding rents. How? Well, remember, when you sign a lease for a apartment, it is based on the value at the time. And if the owners decide to change their market value without notifying the people who signed that contract, they are breaching the lease contracts by taking such action, and thus rendering them invalid. Now, of course, that may be for another story, but what I'm demonstrating here is that, in fact, the properties have not recovered. They are far from recovery. What's really going on is, again, there's an issue regarding recency. Again, this is indicating a 16% year-over-year change. It's not doing the complete history regarding pandemic. And I would argue that if anyone's in the City Council and in the Rental Housing Committee and the Mountain View Voice were to take this information into effect, they would have to retract any information claiming that, in fact, the housing market has recovered in the city of Mountain View. Now I'm going to go to the 3-bedroom, and in the 3-bedroom, the median rent is $43.35 with a year-over-year change of only 3% and 17 units available. But if you look at the history in the chart here, again, pre-pandemic, they were going for $5,500 a month in January 12, 2019. Now it's only $42.73, which is a loss of $1,200 a month in rent. Again, pre-pandemic, at the very most, we did have a dip in November of $4,600, but that was a very short, brief reprieve. In effect, again, in general, the rents were above $5,000. So if anything, again, there has been no recovery regarding pre-pandemic, as well as the current trends regarding the way people are doing work in the area. Google is not going to be able to bring back anyone who is an IT contractor into the area because the state law prevents them from using them. The only way they can use them is by having them work remotely from another state, which is exactly what's happening right now here. This is the key piece of data that no one is paying attention to. And so, yeah, right now our current rents are $43.35, which again go all the way back, and in some brief moments before 2017 regarding what is the current rent. And again, if these rents are lower than they were at the time years ago, well, again, given the situation regarding inflation and everything like that, that should not be possible. Of course, it is possible if the actual properties are declining in value, which is probably what's happening in the city of Mountain View. And again, the city of Mountain View is trying to pick and choose the best information they can. And in this case, they're showing for their current information, the year-over-year change. And as I said, the pandemic has been around for more than a year. And so this information is not necessarily looking at the information accurately. This site does also provide 4-bedroom units in the city of Mountain View. And as you can see here, in fact, this is one of those situations where, with all the other bits of information showing an improvement, this situation is actually showing a decline. For any unit that has more than any place that has more than 4 beds in a rental, as defined by Zumper. The median rent is currently at $48.50, which is actually, I believe, just a little bit above the 3-bedroom, which does not seem to make much sense. But nonetheless, if you look at the history, we are still, again, right around the same price range as we were in the year 2016, or if not significantly lower. During the prior to the pandemic, they were at $7,000 a month, and now we are at $4,800 a month. This is a significant decline. I'm simply demonstrating that there is no pre-pandemic recovery, at least when it comes to the rental market. And I think at this point in time, I've demonstrated that pretty well here. Unless someone else can show me a broader scope of data sample regarding a multi-year history, I would say that I have proven my point that the values in this area have not recovered, and they probably will never recover, given the fact that, again, unless the state changes its law regarding IT contracting, you're not going to be able to have IT contractors live and work in the state of California, which means all of them are literally being relocated out by their own companies to other states. Now, what's going on in here that I'm trying to demonstrate is, if you notice again, how the studio units have had such a spike in demand. What is going on here is this. IT contracting companies are probably making contracts for those studio units so that their IT contractors can travel into the area for hopefully what's going to be a 3 or 4 on-site work week scenario again, if and when we ever get out of COVID. But at the same time, since they cannot reside in California and be an IT contractor, they are now not going to be the people who are going to live and do things in this area other than come in for their few days and go out, which is about 50% of the economic activity that could possibly occur upon any normalization of behavior regarding COVID or pre-pandemic, which in effect means you better get ready for the idea that the economic activity can only recover about 50% regarding any of the side businesses and other industries that were in effect making their living off of people who were living in this geography or in the city of Mountain View. That means restaurants, bars, dry cleaners, all these entities are still going to have record declines and persistent declines of business. And that is probably what is the reason why we are hearing that, oh, we're back to pre-pandemic levels. No one wants to tell the local economy that, in fact, the local economy is never going to come back to pre-pandemic levels. It simply cannot happen. Both AB5 and the continuing pandemic is still going to be a major problem. And I think I've proven my point. The real reality is that no one has yet recovered regarding the city of Mountain View, and there is no sign of it really recovering in reality. And I understand that the City Council and the Rental Housing Committee and so on are all not wanting to say this to the people, because they know that if they say this, there goes the impression of a potential recovery, and thus it will shut down a lot of possible investment into opening up locations that have actually closed in the city of Mountain View all over the place and not yet reopened. And I understand that, but at the same time, this is just a reality. We can't do anything about it. And I think at this point in time, this is really critical information that needs to be corrected by all the entities above: the city council, the rental housing committee, and all local news sources have to look at this information and make a correction. They're going to have to say, no, the housing market is not recovering. It has not yet recovered, and it will not recover under these circumstances. Thank you for your time.